Every Monday to Friday, this is Peter Lewis's Money Talk.
Money Talk.
Good morning, this is Peter Lewis welcoming you to Money Talk for the final time this week on Friday the 26th of June. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 90 million customers across 10 countries. In today's business and finance headlines, the Federal Reserve's preferred gauge of inflation rose at its highest level since October 2023 in May. Excluding food and energy, the core personal consumption expenditures price index showed a 3.4% annual rate after rising 0.3% for the month, both in line with estimates. Sanae Takeichi has set out a $2.3 trillion investment roadmap for Japan in the biggest policy move since her pledge to build a strong and prosperous archipelago helped secure her an election landslide back in February. The Prime Minister's 14-year spending blueprint, which is Japan's largest ever and longest term such plan, combines public and private investment in 17 strategic sectors of the economy and includes more than $600 billion for AI and semiconductors. Anthropic has accused Chinese technology giant Alibaba of running the largest known campaign to illicitly access its Claude AI model, alleging that operators linked to Alibaba created nearly 25,000 fraudulent accounts to generate 28.8 million interactions with the system between April and June. In a letter to US lawmakers, the San Francisco-based AI company said the effort targeted Claude's most advanced capabilities in what it described as an industrial-scale adversarial distillation operation, which was designed to extract and replicate frontier model performance at a fraction of the cost. Crude oil futures turned higher overnight, pausing a decline that has brought prices virtually back down to the level they were before the Iran war started. Brent crude futures settled higher after reports of an Iranian attack on a cargo ship in the Strait of Hormuz raised concerns about how smooth the reopening of the waterway will be. Front-month Brent futures rose 2.1% to $75.26 a barrel. With me on today's programme are Francis Lun, the CEO of Venture Smart Asia, and James Wong, the CEO of Almagest Asset Management. With an update on global markets is Mike Gibbs-Harris, Director of MGH Asset Management in Wellington, New Zealand. And you can join in with any questions or comments by going to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
US tech stocks struggled for a fourth day Thursday despite blockbuster results from Micron. The Nasdaq Composite finished the day down 0.5% at 25,359, marking its first four-day string of losses since February. Shares of Apple led the Nasdaq lower, dropping 6.2%, its sharpest one-day fall since April 2025 after the company announced price increases on its MacBook and iPad. The S&P 500 was almost unchanged at 7,357. Non-artificial intelligence names boosted the Dow to a new all-time intraday high. The 30-stock index was up 72 points or 0.1% and closed at 51,921. Treasury yields edged lower after the latest reading for the Fed's preferred measure of inflation came in line with expectations. The yield on the benchmark 10-year US Treasury note fell 1 basis point to trade at 4.39%. The 2-year yield was 3 basis points lower at 4.12%. In the currency markets, the US dollar index was 0.2% lower at 101.42, snapping a 3-day winning streak. And the Japanese yen fell to its lowest level against the dollar since July 2024. The dollar rose to as high as 161.82 yen per dollar on Thursday. The offshore Chinese yuan was steady around 6.80 renminbi per dollar on Thursday, hovering near a 1-month low. Spot gold rose 0.7%, trading at $4,027 an ounce after falling below the $4,000 mark in the previous session. And Bitcoin is trading 2.5% lower this morning at $59,400. Asian stocks rallied Thursday along with US equity futures after Micron's earnings surged past estimates and reignited confidence in the AI trade. South Korea's Kospi surged 5.4% to 8,930. In Japan, the Nikkei 225 jumped 4.6% to a record high of 72,366. Hong Kong shares continued their descent into bear market territory. The Hang Seng Index declined 335 points, or 1.4%, to 23,077. That's its lowest level since May 2025. The Hang Seng China Enterprises Index fell 2% Thursday, extending its drop to 22% from its October the 2nd peak and putting it in a technical bear market. The mainland CSI 300 was up 1.6% to 5,020. Futures in the Asia-Pacific region are pointing sharply lower this morning. Looks like the Hang Seng in Hong Kong is going to decline 0.7%. The Nikkei 225 in Japan projected to slump 1.7% when trading gets going this morning.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
It's time to welcome our Friday morning guests. We have with us our regular weekly commentator, Francis Leung, the CEO of Venture Smart Asia. Morning, Francis.
Good morning.
And also joining this morning up in Hong Kong is James Wong, who is the CEO of Almagest Asset Management. Morning to you, James.
Good morning, Peter.
I want to kick off by getting both your thoughts on the markets. I mean, Francis, we've had now 4 days of declines in the NASDAQ. Is the tech rally sort of running out of steam, or is this just a normal retracement that we should expect after such a long period of rises for stocks related to the AI trade?
Yeah, I think it's just a temporary consolidation because the AI sector have soared into stratospheric levels and just look at Micron. I think it's surged something like 4 times this year already. And of course the others, Apple, not Microsoft, and Google and Nvidia all rose sharply before falling back. I think people just find the excuse to take profit, especially for Apple. If they can raise prices, this means actually they can maintain the profitability. and I just don't understand why why Apple slumped something like 6% yesterday. I think it's just a normal profit taking. So I won't be spared. I will just stay packed and then ride out the consolidation.
James, what are your thoughts? I mean, Francis mentioned several stocks there. We've had Micron earnings overnight. We've had Apple slumping after it raised prices on its iPad and a MacBook, sort of raising concerns about rising semiconductor prices eating into margins. But there does seem to be a lot of focus at the moment, doesn't there, on the amount companies are spending and investing. It used to be seen as a good thing. The more money, the bigger the number you could come up with, the better it seemed to be for your stock. But that seems to have changed a bit now. People are getting more concerned about these big numbers.
Exactly. The things that the hyperscalers are doing right now, or have been doing for the past year and a half, is to exchange the cash on their balance sheet with capex, and exchange capex with heavy assets, which is just data center. So what they're effectively doing is to use some assets that has no volatility at all, use that to exchange into something that market could easily interpret and imply a discount or premium on. For just capex or heavy assets are all interpretable by the markets and thus produce volatility. And I think the argument between Micron and Apple is a pretty interesting one. Apple is increasing its price in the iPad and MacBook series. The more expensive the original price, the higher the price increase. So it's basically from $100 to $300 price increase. The reason of doing so is because Apple said some of the components are getting too expensive for Apple to sustain its business without raising price. But then Micron's chief business officer was interviewed last night, and he was not about Apple blaming them for pumping the price, because he said during the down cycle 2 to 3 years ago, Micron was warning some of its clients without naming Apple, saying that if you were too aggressive on the price, you pushed too much, then we would have to stop some of the infrastructure investments. So he said during those 2 years, basically some of the clients were very, very pushy on the prices, and in turn, it turns out Micron had to shut down some of the infrastructure investments that I have already put in place. So Apple can't really blame anybody for anything. I mean, during the semiconductor down cycle, it pushes its supplier, and then when the super semiconductor cycle comes to a peak, he put the pressure onto customers. So that's it's not really that justified. Yeah.
Yeah. I mean, Francis, I mean, if we look at, maybe where we're seeing this AI trade play out in all its glory is in South Korea. The Kospi VIX now, the volatility measure of the VIX, is at 96 at the moment. It's a record high. But it doesn't seem to stop really, does it? These companies, and now you've got companies like SK Hynix, which is one of the drivers behind the Kospi, going to raise money in the US, a massive $29 billion fundraising with listing of ADRs on the NASDAQ. So it seems to be taking advantage, isn't it, of its elevated share price to go and raise more money. But is there the appetite for all these IPOs or secondary offerings?
I think for Hynix and Samsung and Micron, I think the appetite is unlimited, enormous, and because don't forget, South Koreans are the biggest gamblers in the world. Their futures market is 100 times the size of Hong Kong. It means just about every salary worker in Korea is playing the futures market every day. So and the lawmakers doesn't seem to understand that, and they want to control volatility. The more you control, and the more people play the market, because people don't even know the stock market now are going into the stock market and buying up this SK Hynix and Samsung already. So I think these two companies are really the treasures of South Korea. Instead of trying to take down tame them, I think they should really support these two companies, like what Taiwan is doing to TSMC, because they account for so much of the GDP that the government should support them any way they can, instead of trying to pass regulations, trying to cool down the stock market. I think the South Korean lawmakers are getting it all wrong.
But isn't there a worry though? We've seen it before in South Korea, haven't we? Retail investors are big drivers of this rally. They are all in. They're using borrowed money. Margin levels are at record highs, so they're using borrowed money to buy stocks. stocks. They're gearing up. They're buying these ETFs, single stock ETFs on Samsung, SK Hynix, which double the market move. So in other words, if the stock's up 10%, you make 20% on the ETF. But if it goes down 10%, you lose 20% on the ETF. They're buying these types of ETFs. And we've seen so many times, haven't we, in the past that that retail investors in South Korea get badly burnt. The regulators then retreat. The regulators are already saying they regret approving these single stock ETFs. So haven't they sort of also got a duty to try and protect retail investors from themselves here?
Well, from a government standpoint of view, they have a duty not to let speculation get out of hand. But this time, it's not just these Koreans, the Chinese, Americans, Europeans, everybody's in on the bandwagon, and everybody in the world putting their money on these three stocks: Micron, SK Hynix, and Samsung. And South Korea has a closed financial market. You cannot freely take money out of South Korea. So they are already very protective of the market, of the economy, and I don't think they can really stop foreigners from playing these two stocks. It's like Taiwan. They cannot stop foreigners buying up TSMC. It's the same way. I think of course, I think this really open up the market, South Korea and Taiwan and even China, and let the currency flow, and then let the foreign payments come in and out freely, instead of trying to control it. I think the more you control it, I think the worse it becomes.
Well, James, let's get your thoughts there, because there's two schools of thoughts here on what we're seeing, isn't there? On the one hand, the earnings are coming through for companies like Hynix and Samsung, and we saw overnight for Micron, their last quarter earnings were more than 4 times higher than from a year ago, and they've also given guidance well above expectations as well for the coming quarter. So the earnings are certainly there. But then at the same time, you look at the volatility of this market, the Kospi VIX at 96, retail investors all in on borrowed money. And then what we're hearing is that they then take the money out of the stock market and put their profits into what's an already inflated property market. I remember seeing all of this. This reminds me of Japan back at the end of the 1980s and 1990s. We saw a similar thing there. So is there cause for concern?
I think it's just okay right now. It's not that crazy. I mean, if you're looking at the dispersion between tech stocks and dispersion between tech stocks in general and other stocks, or the concentration of which, you can see that we are second in history, not the top one. We are only one step behind the 1880s railway bubble. So if you're comparing us right now with the Roaring Twenties, the Nifty 50s before 1987, Black Monday before the dot-com bubble, before the subprime crisis, before 2015, before 2021, we already topped all those. We are just now behind the railway bubble.
So but it's pretty frothy, isn't it? That is pretty frothy and pretty crazy when we're at those sort of levels.
Well, it depends how you see it, because right now the only thing that makes us still kind of comfortable is that it's a huge project, right? AI data center has already gathered about 930 billion in about 4 years' time. It's the fastest speed of raising money for a single project in the history of United States. So if the entire railway infrastructure was cost about 560 billion US dollars, and it took about 70 years. And right now, the highway system costs a little bit more. It's about 660 billion US dollars. But right now in the data center alone, not including other training and logic and chips, data center alone, the investments, the capex is about 930 billion. It's the first in history, and it's a huge project. To say that AI has failed us or AI cannot really increase productivity would be like saying the railway system or the highway system in the United States were a mess or went unfinished and or had no impact in the economy. Nobody could live with that the outcome. So I think everybody was in this together, and it's got to be delivering something. So that's the only thing that's comforting me at night right now. But again,
So
if you're looking.
you sleep well in your bed, but then when you look at something like SpaceX, for example, I mean, how do you justify that? I mean, we're talking about putting colonies on Mars and on the moon, aren't we? And Elon Musk saying the revenues from that could be, trillions of dollars. But how you could almost come up with, it's a dream, isn't it? We're now pricing shares around dreams and hopes, where you could almost take any number you like and try and justify it because no one knows.
Oh, well, the S1 prospectus for a lot of the new startups or newer tech companies were often the laughing stocks of Wall Street. But turns out some of them are doing good. And I have been doing good, actually, for quite a while. And I think if you're buying SpaceX, there is no not a numerical way or logical way that you can make sense of the numbers. Because true, that was 95 times price to sales, even at 140, is a bit much.
Yeah, I mean, that is, I mean, even by the standards of these AI stocks, over 90 times sales. I mean, how on earth do you justify that?
Right, but then if we look at the biggest challenger of all these AI narrative, Michael Burry, he wouldn't even dare to short SpaceX during the first 15 days of its going public. So I think that says something. So the market sentiment is that Elon Musk is someone with extreme management premium. So he successfully turned around Tesla and drawed a lot of institutional investments. And the only thing that I think with his narrative is that the technology advancement has been too fast for the past 30 years. I'm not sure if human beings are able to process another wave of tech advancements, including migration to Mars. But then again, if you're buying SpaceX, you're putting your faith into just this one person, Elon Musk. But I am in that group too. I trust Elon Musk.
You trust him?
Yeah.
Okay.
Yes, I trust him.
Well, Francis, I mean, let me get your comments on that. Do you trust Elon Musk? I mean,
no, absolutely not. He's a greedy tycoon. That's all. I don't think anybody needs 1 trillion net worth, and that is obscene. Unconscionable. I don't think anybody should have that much wealth, and that I go with the and Dami said that we should have a wealth tax on trillionaires. I think a billionaire.
There's only one of them.
Yeah, I think we should have that wealth tax on billionaires. There are more than 200 of them in California alone, maybe 500 in New York City. So let's tax them because their profit, their money is really obscene.
But putting that aside, because I mean, it's sort of like, to be fair, I mean, he can't do a lot about it, can it? He's sold some of his stock into the market, and that's what's made him a billionaire or a trillionaire. But is he a good manager? Is he a good innovator in that, he is looking at the future. I mean, some people say that's why you invest in these companies, but then other people say you look at Tesla, it's not actually that great a company. It's losing market share in all its key markets. It hasn't had any decent, remodelings for quite a while. Whereas you look at the Chinese EV makers like BYD and so on, they seem to be storming ahead. So what would you say?
Yeah. I think already Tesla is losing the EV battle to the Chinese companies like BYD and everybody else. I think I think Elon Musk managed to keep Tesla at such high valuation for years. Even now, if although this company is really not worth not even the 25% what it should be. I think I will short Tesla right now because I don't think it is it can maintain its valuation because its core business is losing ground rapidly. But people are concentrating on his other business like SpaceX, of course. In the low orbit rocket and then satellites, he is alone, and there's not another company in the world that can launch rockets into space with such regularity and without misfiring or exploding. So that is why his SpaceX can value so much, and that's why he managed to raise 70 billion, something like that, on this listing. I think so. It says a lot about his ability to see the future. But of course, the money he makes is really outrageous, I think.
Well, James, let me get your quick comment on that, and then I want to ask you about the Hong Kong markets.
Yeah. On what?
On what Francis just said on his views about whether or not Elon Musk is really a great innovator and someone who's forward-looking, future-looking, or is it all a bit of smoke and mirrors?
Well, I still think he's a innovator plus excellent manager because if you're looking at the gross margin, I think BYD briefly caught up with that of the gross margin of Tesla for about a year and a half in the past 5 years, and then BYD's the gross margin slipped again because it's not a pretty game selling EV everywhere on the world. It's a tough market. But then Tesla's gross margins stay intact. So I think that says something.
Okay.
And yeah.
Let me ask you about. I want to ask you about the Hong Kong China market. It seems to have the opposite problem, doesn't it? South Korea and the US, in that it doesn't have any not enough AI related companies, and people seem to be dumping the markets here. Every time Korea and Japan goes up at the moment, it seems the Hang Seng moves in the other direction. It's at a 1 year low. The HSCI index is now in a bear market. It's down over 20%. So is the MSCI China index. That's also in a bear market. What is going wrong for Hong Kong shares?
I think it's the structure of the Hang Seng Index, or the way that they include new constituents into the index. I mean, if you're looking at the entire world right now, like Francis said, people are just buying into 3 to 4 stocks, right? The 2 from Korea and the 2 from the United States. So it's a very prominent show of money when it comes to invest in stock market right now. Just AI, hardware, HBM, memory, basically just these 2. Now, there are no more other prominent investment theme that is enough to attract investor attention, not even gold. So in Hong Kong, it's a different story because when we look at Korea and Taiwan, I mean, Korea's market is very, very pretty much closed. And institutional is not easy to even for institutional to get access to a omnibus account in Korea, and so the thing is the Korea market, the Kospi or the Kosdaq is only have about a handful of stocks other than the memory names. It's probably got some gaming stocks, got some the entertainment agency names, and some social platform names. That's about it. So their index is fairly focused on tech and on memory. So is Taiwan's index. But when you're looking at Hang Seng Index, it included some AI application names. But again, there are more than 90 stocks in the Hang Seng Index. And the way that the Hang Seng Management Company adds constituents is to include those companies that are at the peak of their industry cycle. So once they were included, the cycle might just start to go downhill, and the index start to perform not as well, or the stock when they were added into the index, they started to perform not as well before they were added because the cycle of their industry, the peak cycle of their industry might have been behind them. So that's the thing that I think Hang Seng Index needs to work on. First, you got to stop being so blurry, right? You have more than 90 stocks, and you have financials, real estate, you have some big tech names, and you have not as much AI hardware or AI application names. So you got to work on that. And the second of all, you gotta think of a way to include more names that might do better for the index or draw more investor attention.
Okay, well, what you're saying, I've heard several fund managers echo similar concerns about how these indices are constructed, the Hang Seng, also the Hang Seng Tech Index as well. Francis, what's your assessment? I mean, Hang Seng now at a one-year low, the Enterprises Index in a bear market, MSCI China in a bear market.
Yeah, I think the problem is really too much government control. I think Tencent and Alibaba, I think several years ago, they used to be among the 10 biggest companies in the world. And then came 2020, and the government stopped the listing of the Ant Group. And then from there on, it's almost all downhill from then on. I think the government just want to control too much of everyone in the country. And you look at Manus. Manus is, of course, they already move out the company to Singapore, and then the Chinese government stopped it. And it's just too much a heavy government hand. And there are so many, what you call the market manipulation inquiries. And so then you heard all these so-called platform stocks and all these tech stocks. Then they have always looked over their shoulder. When is the government going to issue some directive, and they find them? So I think from 2000 to 2020, the internet technology companies have had a free ride, but after 2020, I think it's been a tough ride for them, especially the past year. And I think I hope the Chinese government will start loosening the control over the tech stocks.
James, what's your thoughts on that? I mean, we're seeing obviously the mainland raising concerns about offshore accounts. The regulators here in Hong Kong are casting a much bigger eye over the opening of accounts and whether or not they belong to mainland Chinese. Is that having an impact on the market? And also, is it having an impact on Hong Kong's standing maybe as a wealth management centre?
Yeah, it definitely appears to have some. I mean, after this news came out, Hang Seng Index hasn't been doing so well. But in terms of institutional money, I think Hong Kong is flooded with institutional money. A lot of the tier one banks, regardless of their nationality, are willing to provide financing at the side of the business that they were reluctant to do so before. So there are a lot of money in the system right now. I mean, institutional money in the system right now. I'm not sure if the reduction in retail trade or retail flow will have a material impact on the index, but sentiment wise, I think there is an impact.
And tell me a bit about Alibaba. What do you make of this accusation from Anthropic that Alibaba has illicitly accessed its AI model? How seriously should we take that?
I think that's a known fact. So people already have priced in whatever consequences or implications this distilling measure has on both companies already in the market. So the de facto, I mean, the effective thing that Alibaba or any other model runners are doing is to ask the likes of Claude a huge amount of questions so that they can distill the information that has already been trained and baked into those models, like the models of Claude or Gemini. But right now, if you're asking any model out there, the four main ones, the Geminis, the GPTs, the Grok, the Claude, if you ask them in simplified Chinese or in English about their identity, they're going to tell you that they are not themselves. They're going to tell you that they are Doubao. They're going to tell you that they're QN. So I think distillation is become a weapon right now for any model runner, model trainer to use. So everybody is actually distilling on everybody. But of course, Claude and OpenAI came earlier, so they might be hurt the most.
So it's not just Alibaba that's doing this; it's everyone basically is doing it.
Yeah, I think the earlier that you trained your first or second generation bots models, the easier that you will become the one that suffers the most in this wave of distillation.
Yeah. I mean, Francis, what do you make of this? I mean, does it raise questions about Alibaba's progress in the AI space if it has to do this, despite the fact that maybe many other people are doing it? Because it's not just this accusation from Anthropic, is it? Although it had an impact on the share price yesterday, it was down over 5%. I mean, Alibaba has been sliding for a while, hasn't it? Because it's people are worried about, its platform, its retail platform, domestic consumption, and the likes. It's just not making the same sort of money from its e-commerce business as it used to. So what do you think about Alibaba and these accusations?
Yeah, I think the accusations are true. I think so. But they are not the only one doing it. Like James said, I think DeepSeek has been doing it for some time, even Tencent and everybody else. The problem with this AI software is that once it is out in the market, you cannot stop people from using it and then discovering what are your tricks, something like that. But the problem, the thing is, you have to try to keep one step ahead of your competitors. I think right now, the Chinese AI companies are really one step behind the Americans. That's why you have so much snooping and all these attacks and all these what you call the queries trying to steal the trade secrets and things like that. And of course, stealing others' trade secret is much easier than trying to develop your own software. It's a much quicker way to achieve your goal. And that is a fact of life in the AI world.
Well, James, let's have the final word from you on all of this. I mean, going back to the Hong Kong market, what would change sentiment here? What would you like to see that maybe might turn things around a bit?
Oh, well, that's kind of I'm not sure about that. But for Hong Kong markets, we're using Hong Kong stocks, mainly the China banks, China insurers, China communicators, communication providers, China resources type companies as targets of yield play. And I think for any given names in those industries that has provided a yield, dividend yield about 5% or above, we will be comfortable holding those for and not looking at them for a while. We're just gonna let them sit there. So apart from that, if you have a certain amount of money in your bank account that you can use freely, I'd say you can participate in the public offering of new stocks. And by participating, meaning you're probably not going to just use that cash alone. You're probably going to use some level of leverage, because otherwise you won't get much in the public offering. And probably you're not going to hold that very long. There is, as long as there is a chance that you can sell your allocated shares, just sell them. So that's basically the two things that you can still make money in the Hong Kong market.
Thank you both very much. Have a great weekend. You heard there James Wong, who is the CEO of Almagest Asset Management, and Francis Lun, the CEO of Venture Smart Asia.
Peter Lewis's Money Talk.
It's the end of the week. Let's go and join Mike Gibbs-Harris, who is director of MGH Asset Management, which is based in Wellington, New Zealand. Morning, Mike.
Morning, Peter.
Now, look, I'm intrigued about your thoughts on what's happening in the global markets. We've had a bit of a tech sell-off, haven't we? In fact, quite a big tech sell-off, which sort of initiated in New York, but has spread around the world to Asia and Europe. Is this just normal profit taking after what's been quite a stellar rally for some of these tech shares, hasn't it, over the past year? Or is there something more serious going on behind this?
It feels as though people have been chasing this rally in tech quite a lot. It really is now beginning to feel reminiscent of the internet boom of 1999 and 2000, insofar as there are some quite big swings for no apparent reason. I mean, you see it in Korea, which is up, or down 5% or 10% every day. And I think there's a fair degree of uncertainty as to how sustainable all of this demand is for chips and for data centers and for anything related to AI. But people are quite happy to go and jump on the bandwagon. So there's I think a great deal of uncertainty. And on the other hand, you have the fact that inflation has crept up, even though the price of oil today is now back to where it was before the US and Israel started bombing Iran. There will still be more inflation coming through the pipes, as it were. And I think interest rates are having to move up, both in the US and in other markets outside the US.
So you've mentioned two reasons there. Let's delve into that a little bit more. I mean, one of them is just how far these tech shares have rallied. I mean, what used to be the case was that the more these AI enablers, these platforms, semiconductor companies spent on AI, the better that was assumed to be for the likely reason that they might get future earnings. But now that seems to have gone into a reverse. The more companies are spending on AI, the more they seem to be coming under the spotlight. Is that what you're seeing as well?
I think it depends on the company. I mean, if you're a semiconductor manufacturer, the more people spend on chips, the better it is. However, the big US tech companies, the Microsofts, the Metas, and so on, they were always perceived as just, coining it hand over fist with, cash flow coming out of their ears. And now suddenly they're going to have to go and increase their capital spending quite a lot. And you've seen this with people raising money. You've also have the problem, with SpaceX, coming. I mean, that's going to absorb. It's absorbed some money that would have gone into other shares, but there are more IPOs coming after it. So the flow of money into the US market and into the US tech sector is probably a little bit more constrained than it was, say, 2 years ago.
I mean, this does ring alarm bells, doesn't it? You mentioned SpaceX. We saw that soar in the couple of days after its IPO. And then we had in one day a 16% collapse, wiped out $400 billion in market value in just one day, the second biggest market loss in history. It sort of suggests, doesn't it, that valuations and excesses in the markets have got a bit out of hand.
Yeah, I agree with that. But typically IPOs, you get a first day pop and then they underperform for about the next 2 or 3 years, and that's sort of what I think what we'll see with SpaceX, and we'll probably see with Anthropomorphic and anybody else.
I mean, the problem with a company like SpaceX is you can't really value it, can you? Because you're sort of chasing a dream, or you're chasing Elon Musk's dream. In this particular case, he wants to put colonies on the moon, have a city built on Mars. Well, what is the likelihood of that happening in our lifetimes, and what can you earn from it? You could almost put any number you like on it, couldn't you?
Well, that's the role of sell-side analysts.
Yeah, well, I suppose they did a good job, but
they did an excellent job of selling it, and I mean they've managed to go and get enough retail demand. They've managed to go and twist the arm of most of the index providers, and so there will be demand for it without any doubt at all.
So is this going to continue now? Is the market now going to continue to question the sustainability of this hyperscaler level AI spending? Is that now going to become a drag on the market, whereas before it was a tailwind for the markets?
Well, if it does come under pressure, it will undoubtedly be a tailwind for the market, because something like 40 or 50% of the US market now with SpaceX is tech, and so given that roughly 2/3 of the world index is the US, and let's say a third of that is tech, then something like 22% or 25% of the world index won't be doing very well.
I mean, what do you make of this volatility? I mean, this volatility that we're seeing, I mean, sometimes it's regarded as being a good thing. It certainly enables traders to make money, but we're at extremes now, aren't we? I mean, South Korea maybe is the best example of that. You see the market slump 10% in one day and then make it all back again a couple of days later. The VIX for the Kospi, the volatility of the Kospi, over 90%, record high. This isn't normal, is it?
Well, no, it's a record, so it's definitely not normal, and it's all from two stocks, or maybe three, but all from SK Hynix and Samsung, and they're up incredibly strongly. And this actually comes on to another interesting thing. I think I've got this the right way around, that the MSCI has Korea as an emerging market, and FTSE and Russell have it as a developed market. So it depends what ETF you've bought. If you bought an emerging market ETF, as to whether or not what index it's following, and whether or not that index includes Korea.
Yeah. Yeah, I mean a lot of people were expecting MSCI to upgrade South Korea to developed market status. And I suppose in some ways you could argue it is. It's what the 6th, 7th largest market in the world now. It's overtaken the UK. You would think that maybe this is a developed market, even though sometimes the volatility is more like that of an emerging market. So does this make a difference to the outlook for Korea longer term, this leaving it as because MSCI is sort of more of a consequential index provider than, say, FTSE Russell or Dow Jones, isn't it?
Yeah, I think it was an interesting comment, and by MSCI, that you know, this is a fairly volatile, I think immature market, I think is probably a good way of looking at it, because something that goes up, what, 80% last year and it's almost doubled again this year on the back of half a dozen stocks is not, a well balanced market. Let's put it that way. But it's done exceptionally well.
And how much of this volatility are we seeing in Korea is due to the fact that retail investors have in effect gone all in, haven't they? They've borrowed on margin at record levels. They're buying these single stock leveraged ETFs on companies like SK Hynix and Samsung. So when you get, like a 12% plunge that we did the other day in SK Hynix, the ETF is down 25%. There's going to be some real pain, aren't there? And particularly for retail investors. And this is not the first time we've seen this in Korea.
I think the question is what sort of money is being used, and also how the leverage is set up and who is responsible for meeting that leverage. But if it's just your play money, then that's fine. But about, I'm going to say 18 months ago, there were a lot of articles about how Koreans were going into ETFs, but they were actually all going into US ETFs. And that was just before their own market took off. And so I'm not sure that Korean retail investors are necessarily a group whom you want to follow over a long period of time.
Yeah, but I mean, when you look at what's happening in Korea, you've got these retail investors who are borrowing on margin, ploughing into leveraged ETFs on single stocks, then taking their profits and putting that into an already overheated property market. Haven't we seen this all before? Isn't this sort of reminiscent of Japan in the early 1990s?
Yeah, pretty much. It didn't end well there either. Yeah.
I remember it. I was living in Japan at the time. It ended very badly, didn't it? It took 30 years for the Nikkei 225 to get back to a record high.
Yeah.
I mean, when you look at the sort of things that are going on, though, in the markets, this sort of leverage that we're seeing, record-breaking highs, sort of massive corrections, what do you do as an institutional fund manager? Because you're not obliged to buy, so you're not a passive fund, so you're not obliged to buy stocks like SK Hynix and Samsung if you think they're overvalued. The only problem is, of course, is that if you don't buy them and they carry on surging, you massively underperform your benchmarks. So what do you do?
I think if you think something's overvalued, then you just have to go and stick with your beliefs. I mean, I've been wrong many, many, many times and probably been too conservative sometimes. But if things look as though they're overvalued, normally they come back to fair value, but it may take a lot longer than people expect.
Now, you mentioned another reason for why we're seeing this sell-off, and that is rising interest rates. We're seeing rates all around the Asia Pacific region rising. Australia's raised rates. Japan has. We've had Indonesia and the Philippines do it. Singapore's tightened monetary policy. But of course, everyone's focusing on the Fed and what they are going to do. We had sort of a bit of a surprise, didn't we, from the Fed last week? And we got a rather more hawkish press conference from Kevin Walsh than perhaps people thought we were going to get. So what do you read into that?
I think that, the Fed's target is to have 2% inflation, and we haven't seen 2% inflation for some time there. Now, you can argue that the recent bout of inflation has been due to oil prices going up, but it seems to be more than that. So I think that probably interest rates have to rise slightly, and I think that may even help the bond market at 4.5% for a 10-year US Treasury.
Kevin Walsh said it, didn't he? He said for 5 years now, inflation has been above the Fed's 2% target. He said his top priority was price stability, and something has to be done. So we presume the something must be interest rate rises. There's not much else they can do, is there?
I think Walsh is trying to ensure that he can cut the Fed's balance sheet, and maybe he feels that that will have an effect on reducing inflation as well. But if you reduce the supply of money around, then normally interest rates go up as well. So I would expect market interest rates certainly not to come down from here.
And what about if we do see rising rates? What sort of impact is that going to have? I mean, presumably for these AI companies, which are borrowing now a lot of money to fund their expansion, it makes their costs sort of higher. When you discount earnings back now, you have to take that into account. I presume it's not good for these companies like Alphabet and others that are borrowing large amounts of money.
I think that there's two things. Quite a lot of their borrowing is actually being done in the corporate bond market, and so far corporate bond spreads have been fairly narrow, and so they'll have locked in the amount of money which they need to borrow for some time. But on a normal dividend discount model, normal financial theory, which probably doesn't actually apply to Korean retail investors, normally all else being equal, you'd expect higher interest rates to have to cause lower multiples.
And what about
Sorry, go ahead.
No, you carry on, Mike. Sorry.
I think the other thing which seems worth pointing out is that the US market was basically given a great deal of credit, and it did have a very good first quarter earnings results. But some of those were just, particularly for the large tech companies, they were taking effectively, they were accruing capital gains from their investment in artificial intelligence. So even though the profits have been good, the cash flow hasn't been as good.
Right. And what about in the currency markets? We've got the dollar now at over 1 year high, the US dollar index. We've got multiple Asian currencies slumping to record lows or close to it. I think the yen now is at the lowest level since 1986. You've got the Indian rupee at record lows, various Southeast Asian currencies at record lows. What does this all mean going forward for the Asian markets?
Well, most of them have actually increased their interest rates, but I think this is following on after the war in Iran and the shutting of Hormuz and the increase in oil prices. Whether or not this will be reversed, I don't think the interest rates will come down quickly, but whether or not there'll be some effect in the currency markets as a result of this.
And what about the yen? I mean, there seems to be nothing the Bank of Japan and the authorities can do to stabilize it. It just seems to want to keep on sliding. What can be done about the yen? What can the BOJ do?
Well, the obvious thing it could do would be to put up interest rates again. But I don't think it wants to go and do that. And until it does that, I think that the yen will continue to be under pressure.
But presumably that's going to be good for the Nikkei 225.
Not necessarily, I don't think. Not if they put interest rates up.
I mean, interest rates in Japan, they're 1% at the moment, aren't they? I mean, they must be way below what could be considered a neutral value. So presumably the BOJ is going to have no choice. It's whether sooner or later it's going to have to raise rates again.
I think it will have to, but they have a problem. If you're used to borrowing at 0.5% and suddenly rates go to 1.5%, then your interest costs have tripled. And even though it's still at a fairly low rate, it certainly affects your income statement or your own cash flow.
So finally, putting this all together, where do you see opportunities at the moment in the Asia Pacific region?
I think some of the ASEAN markets have got really badly affected. Indonesia is beginning to look interesting, but there's still the threat going back to indices as to whether or not it gets kicked out of emerging markets and becomes a frontier market, because that will cause some selling. But there's a lot of companies now in Indonesia with 8, 9, 10% yields, and the currency looks cheap. And I think the government has learned that it can't defy the markets hugely. I think the Philippines is fairly cheap. I mean, generally ASEAN has had such a terrible 10, 15, 20, 25, 30 years, that it's probably worth having another look at.
Okay.
Nobody talks about it. It doesn't have much AI exposure, but yields are pretty high, and the economies are not doing badly. They've been hurt by the war in Iran, but that now looks to be over. There'll still be some lingering effects from that, but generally, the valuations are much cheaper than the rest of the world.
That's Mike Gibbs-Harris, who is Director of MGH Asset Management from Wellington in New Zealand.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you very much for listening this morning and this week. Don't forget to take a look at my daily newsletter, which is at peterlewismoneytalk.substack.com. I'll have more business and finance updates for you on Monday. Joining me then are Alex Wong, Director at Alex KY Wong Asset Management, and Frederick Chu, Managing Director at Premier Partners. Have a great weekend.
Money Talk.